Are we seeing the collapse of China's economy right now? Hi, everyone. Alex Kaminer here with Twin Shores Financial YouTube channel. We help translate what's happening in the financial markets so people can use it in their day-to-day lives to make sharper financial decisions. I'm here with Tim Nihill, our founder, and Alex Krieger, a phenomenal analyst and resident crypto expert. We're here to talk about what is happening in the traditional and digital marketplace and to share the news that we hear on the street. As a reminder, everything you hear here today is not financial advice, but is meant for informative and educational purposes. For today's big topics, Tim and Alex will be talking about basic strategies, basics on what's happening in both the crypto and stock market, as well as talking about China's economy recently in the last couple of weeks. We also have an update for you on the Ethereum merge. If you enjoy the content, please like, share, subscribe, and comment below. Tim, off to you.
Yeah, so I think the past, since we've done our last market update, in the traditional markets, basically in the fight for inflation, in the fight against inflation, central banks are starting to blink, right? So what does that mean? So central bank policy over the past 6 to 9 months was very focused on what they call quantitative tightening. So, we've done almost 2 decades of money printing. Now we have to reverse these easy monetary policy that we've been used to for the past 15, 20 years. The issue in doing so, because the money printing across the board, across the world has been at such an astronomical level that the unwinding is creating some very, very, very painful situations for industries, businesses, people, etc., across the world. So 2 weeks ago, the European Union, basically started to split apart again. The United Kingdom is off on their own, and they said, we are no longer going to start tightening. We're going back to the printing press, and we're going to keep printing money in order to help us get through these tough financial times. Bank of Japan, and Japan has done the same thing. Although you have to give it to the Japanese. I mean, they've been pedal to the metal on quantitative easing for the longest time, and they refuse to let their foot off the gas pedal. So it is what it is. And then, so we've seen a couple countries in the Middle East start to reverse their policies as well. And even as of yesterday, the Bank of Canada announced that they are not going to tighten. They are going to start lowering rates and printing more money. And now it's just a matter of time for when the Federal Reserve does the same thing, right? Makes sense? So go back 2 years. We all remember March 2020, the market dropped 45% inside of, it felt like a day. And the Federal Reserve came in and they printed basically 40% of the money in circulation and put that 40% into circulation to get through the financial crisis. Well, we've been tightening, trying to unwind that. We're getting to the point where you see every day the markets are up, they're down, they're mostly down. And it'll be very interesting to see next week and the week after if the Federal Reserve continues their rate hike, or they become more hawkish, as they would say, and they reverse course. What does this mean to everyone that's listening to this? It means that your dollar is worthless if you are a United States citizen, right? So we're living in a crazy world where it's a tale of $2. If, for example, Alex Kaminer, if you lived in Italy right now and you bought a US dollar, your return on your investment, because Italy's currency is so bad, is probably around 15% right now by owning dollars. That makes sense?
Yeah, that's crazy.
That's awesome. That's great. The strong dollar, everyone's talking, oh, the dollar is strong. Well, a strong dollar is good if you don't live in the United States. It's bad if you live in the US, right? So you're here in America. Here's the issue with your dollar. Your dollar is losing over 10%, right? So we're living into a world where it's a tale of $2. If you don't live in this country and you buy dollars from overseas, that is a very good thing for you. Unfortunately for us that live here, having a strong dollar is very, very painful. and inflation is only going to get worse. We're going to see, I think, some things play out in the oil and gas industry we've been talking about. And they're already talking about, we're going to see $5, $6, $7 a gallon, gas again. So we're going to probably be running into that. We have midterms. Who knows how that's going to play out? And I think with all the information that we're seeing, and there was a really, really good interview on Bloomberg with, his name is Nouriel Roubini. So for everyone out there, it's Nouriel Roubini. He just did an interview on Bloomberg yesterday, which I think is fantastic. And it encapsulates, here's the situation that we're all looking at across the world. All the governments in the world are bankrupt. All the banks are bankrupt. And now we're going to see a big run on banks. So we are going to see, at least what we're staring at right now, and what we're probably going to see is a market which will be worse than what we saw in 2008, right? So if you have an IRA, a 401k, like we've been talking about, half of what you have today will probably, in terms of that valuation on that statement of yours, will be half of what it is. So we're looking at a massive drop in the markets unless the Fed unwinds the balance sheet or unwinds their quantitative tightening and reverses and goes back to printing money. And then in that case, our dollars are worthless, which is going to happen. And everything you own outside of cash and bonds is essentially worth probably infinity, right? Because there's there's really no cap on how high that it can go if they print money. So all in all, that's the crux of it. We're now, I would say, in the red zone. It's, if you're not prepared for this now, it's going to be too late in 3 to 6 months. So if you're not properly invested, properly prepared, there are going to be some massive pain points. And if you're a retiree or you're close to retirement and you haven't reviewed your 401k, you haven't looked at your IRA accounts, you need to do this like immediately within the next 3 weeks. That's kind of the situation we're looking at. So we're going to read the tea leaves. I think the next 60 days are going to be very interesting. And we're going to see more and more countries and central banks and banks like Credit Suisse collapse. And we're going to experience more pain in the markets than what we did in 2008. But at the same time, if you're smart about this, it's a massive investment opportunity. Massive. So that's kind of the update in the traditional markets.
Speaking of the traditional markets, you mentioned something yesterday to us that what's going on with China's economy? Let's talk about that real quickly before we get into the crypto stuff. What are we seeing the collapse of China's economy right now?
China. Yeah, we have China. China's economy has collapsed, and it did 2 days ago, right? So think about that and digest that for a second. The Chinese economy has collapsed, and they're trying to figure out they're going to have to get out of this hole. Here's the crux of it. So we all have a pretty good idea of New York City, right? New York City is a big place. Over the past 20 years, the Chinese have built over 100 cities the size of New York City. Does that make sense? These cities in China are, no joke, they're about 70 miles apart from each other. So imagine going 70 miles and hitting another New York City, 70 miles and hitting another New York City. There's 100 of these cities the size of New York inside of China that they've built over the past 20 years. Here's the kicker of it. No one lives in it. No one lives there. There's nobody living in these cities. So you had a massive amount of materials and workforce and all this stuff that went to building these ghost cities that now all of that money and capital and human capital and labor have been ripped out of the entire system, right? So the Chinese are in a major, they're going to have some major, and they have some major problems that they have to deal with. So it's one of those things where it'll be interesting to see how countries around the world react to this, and especially here in the States. I mean, we've seen the writing on the wall, especially with COVID. Like, we're going to see our manufacturing and productions and, you know, our development and things like semiconductors and chips and all that stuff. I think you're going to see a lot of that starting to get pulled out of China and go elsewhere. But the Chinese are bankrupt now, so that means they have to pivot. The European Union is all pivoting, right? Canada is now pivoting. Like, this quantitative tightening and raising rates cannot continue because it's just going to be catastrophic, right? So if you're an investor and you're sitting in cash and bonds thinking that's a safe haven, this is the worst environment to ever own a dollar, and it's a worse environment to ever own a bond. And we're talking like we haven't seen this in over 40 years. So you have to have precious metals. You have to look at basic materials. You have to look at the right equities. And I think there are some technology companies that we all know that their stock price will go to zero. Can you imagine that? So, not saying that, let's use Facebook or Meta as an example, not saying it's happening to them, but there are going to be about 40 to 50 technology companies at that size that they're so in debt, they're going to have to wind down their debt and write it off. And in order to do so, their stocks are going to go to zero, and ownership of those companies are going to shift to the bondholders. Now, I've been in finance a long time. I don't ever even remember seeing anything like that. So we're, you know, these next 6 months are going to be interesting. So, you know, for everyone out there, hear what we're saying, because the chatter on the inside in the financial world is not good, and it's worse than I can ever remember seeing before.
I think that maybe digital assets and crypto might be our saving grace. And I think that that's a good segue into what's happening there. So, Alex, what are you seeing right now in the digital assets and crypto marketplaces?
As long as they're not CBDCs, we don't want those. I don't I don't want that as my crypto.
Just for the audience, can you explain CBDC?
They're the banks, the Federal Reserve's version of crypto, where they can pretty much print as much crypto as they want. It's kind of scary stuff there. But no, markets have turned around. We see a lot of deleveraging, I think, and that's why we're starting to pump and have this 20, I think it was like 15% in the past 2 days, 20 off the bottom. So with the new ETH 2.0 merger last month, there's been concerns of on-chain censorship with Ether due to a bunch of blocks not transacting Tornado Cash due to OPEC sanctions, which were sanctions earlier this year to help with money laundering. The U.S. government thinks Tornado Cash is a money laundering site or crypto. I will say, since the merger, though, since September, 55% of the blocks now do not include it. So there's kind of a censorship of Ether happening right now, which is kind of a scary thing.
Interesting. Yeah, because it seems, does that go against DeFi in general as a concept?
What? The whole censorship or Tornado Cash?
Well, the whole situation with the merge, and it's
pretty much, yes. That's with pretty much they're making it they're making it centralized in an aspect, which is scary.
Sounds very scary. It's the exact opposite of what crypto was originally developed for.
Correct. We should have, it's hard to explain. Other news, I would say XRP has created their own EVM, which is similar to a side chain that can be compared to Ether, which should be coming out in the next couple months, which is really interesting. Should help them with the lawsuit coming up that they're going through right now with the SEC.
How is their lawsuit looking with the SEC?
They got some files of the former, or some documents saying of the former SEC head, pretty much praising XRP and other stuff. So we'll see. They just got those documents released last week or last month. I don't know exactly the timing of when it was released, but was released to the judge and should be looking in their favor now.
Yeah.
Because it's kind of weird that out of every 2,000 cryptos or whatever, XRP is the only security. Just seems a little odd.
Yeah, that one is a little odd. It's funny. I've been watching some recent interviews, if you will, with over the past couple months with Mr. Wonderful, Kevin O'Leary. And he's invested a lot of capital into the crypto space. And I would say for anyone out there listening, go look at what Kevin O'Leary's talking about and how he's talking about crypto, because I think he's got a pretty good window into what's going to happen in the next 2 to 4 years.
Yep, he's a smart dude, man. He knows his stuff. He created his own DeFi stuff. A lot of his stuff runs out of Canada, though. It's not a problem, but a lot of it gets run out of Canada.
Right. Well, that's because most things are invented in Canada first on the finance side, and then the Americans take it and make it business.
Interesting.
Right. So, exchange traded funds.
Yeah.
ETFs, they were invented and they came out of the University of Toronto in 1991. Target date funds for 401ks, which are complete garbage, but we'll talk about that later. That's another Canadian instrument.
Really? I did not know that. It's really interesting.
That was the other thing that we saw too, right? We two of the largest banks in the world just said they're going to come out and custody crypto, right?
Yep.
So General.
Fidelity also start
Fidelity.
the 28th in 2 days. They go live for Ether as well.
Right.
For their clients.
Yeah, I think as much as the market looks like it's down, man, there's been a tremendous amount of activity in the crypto market.
Big players coming in.
Big players are coming in.
Hopefully you didn't sell to
them. Well, and I think that ties the traditional markets, right? Because we are going to be at the point where everybody's going to have the opportunity to own crypto and traditional investments in their brokerage accounts, retirement accounts, 401ks. It's all coming. So I would say now is, if you're not in, you really have to start doing your homework and starting to allocate some investments into this space, because people are just doing a massive disservice to themselves if they don't.
Even if it's just the stable coins, moving cash from the regular stocks and bonds, traditional, to the crypto, just to have the cash ready. You'll still have the USD in your account. I just think it's smart to have some sort of cash. And I don't know what you do, the staking through Gemini, Tim. What's the percentage right now that we're getting? Is it like 3%?
At least.
Okay. Which is still better than what your bank's giving you, 1.2 or just now.
Yeah.
Some banks give even less than that.
Yeah. The comparison between the stable coins and just sticking with, we're not going down the Tether route, obviously, but with the USDC stablecoin and Gemini dollar, I mean, there's at least 1.5% higher than what you're going to find in your bank.
Yep. And it's on the exchange, ready to buy right away. You don't have to wait a couple days to do a wire transfer and so forth.
Right.
So.
Right. And we will, and stable coin regulation probably will be the first piece of crypto regulation that's going to happen in the next I would say within the next 9 to 12 months at the most.
By the end of next year.
Yeah. So,
Interesting.
yeah. It's going to be a very interesting winter.
Yeah, I see stair ladders pretty much. We pump, now we're gonna have a little bit of a retrace, go sideways around 13, 15 maybe, then pump back up to 17, sit there for a few days or a couple, you know what I mean? 3 to 5 days sideways, then pump again, and then we'll probably have a big dump right around election time. That's my prediction,
Yeah, it'll be like Stairway to Heaven for Led Zeppelin.
pretty much.
All right. Well, I think that is everything we have for today. So on behalf of Twin Shores Financial, thank you guys all for tuning in. If you enjoyed it and want to keep up to date on the markets, please tune in every other Thursday for your financial information. Please don't forget to like, share, and subscribe. And if you have any questions, please don't hesitate to comment down below. Tim, do you have any last words?
Yes, everyone out there, do your homework and do it now. Time's running out.
Thank you guys all for tuning in. We hope you enjoyed.